Hi, good afternoon and good morning. Welcome to today's webinar. With most schools back in session, it's time for us to put a webinar together, and we thought about the ABCs of educational planning. I'm Bill Shannon, the Director of Strategic Growth at Altair Advisors, and I hope you and your family are safe and healthy, and thank you for spending the next 30 minutes with us. Housekeeping, your line is muted. We are recording and we'll share this. You can also look at the event resources on the bottom of the screen for more information. If you have questions after the conversation here, please reach out to me or your primary contact at Altair. We'll look at the next slide. Today, I'll be joined by Katie O'Hara, our Director of Financial Planning here at Altair. She's going to talk about how to prepare financially for the cost of higher education. And we have a guest speaker, Laura George, founder of Laura George Consulting, an independent educational consultant. She's going to talk about the non-financial side of preparing a student to have a successful career in higher education. If you look at the next slide, some of you on this call are new to Altair, so let me just take a moment and describe our firm. If you look towards the top, Altair Advisors provides wealth guidance for life. Think about that phrase for a moment. Life events, both expected and unexpected, ultimately drive investing and planning. In the middle of the screen, you'll see we are privately held and structured for independence and broadly owned by employees, which means you have direct access to leadership and decision makers. As a registered investment advisory firm, we maintain a fiduciary standard of care, which means we work in our clients' best interests first. We do this by collaborating together. Since 2002, we counsel a select client base of individuals, families, and related charitable entities from all across the U.S. If you look at the next slide, our core competencies include investment management, client education, and financial planning. Today's content involves both the education side as well as the financial planning side. Our clients come from all walks of life, including entrepreneurs, business owners and business owning families, C-suite executives, retirees, among many others. Our experience intersects financial and personal issues, which drives decisions about wealth. Next slide gets a little bit deeper into Altair, and we call this the iceberg slide. It highlights the behind-the-scenes resources that are available to our client base for a superior client experience. Our last webinar, we focused on the investment research and investment outlook. If you look at 9 o'clock on this slide, today we're going to focus on with Katie O'Hara, the head of the financial planning team. Her team gathers, organizes, and prepares clients' comprehensive financial picture. It is our life's work to simplify the complexities of wealth so that others may enjoy all it enables. If you look at the next slide, we'll begin our topic. Why this topic? So, inflation is on everyone's mind at this point. And a good rule of thumb is that tuition rates, it'll increase at about twice the general inflation rate. So on average, if tuition tends to increase about 8% a year, an 8% college inflation rate means the cost of college doubles every 9 years. So I'll ask Katie to join us, and I have a few questions for her. Hi, Katie.
Hey, Bill, how are you?
I'm doing great. It seems like 529 plans are pretty popular. So can you talk a little bit about these plans and some of the pros and cons?
Sure. Great question, and thank you for having me here today. So yes, 529 plans, Bill, are a popular vehicle used by many of our clients to fund college. I do want to point out, though, that they're not the only vehicle. So other options out there include UPMA and UGMA accounts, trusts, covered L accounts, Roth IRAs, and cash value life insurance. Many of our clients also choose to pay tuition directly to the institution. But I would say that 529 plans are one of the more popular, if not the most popular savings vehicle, really for a multitude of reasons. You'll see on this slide here, there are a number of items. The big reasons, the big ones to really focus on are tax breaks. So money contributed to a 529 plan grows tax deferred, and withdrawals are tax free if used to pay for qualified education expenses. Do keep in mind that non-qualified distributions are subject to a 10% penalty plus income tax on any of the withdrawn earnings. Depending on where you live and the plan that you choose, you could also potentially get a state income tax deduction on contributions. The other big reasons why many people choose a 529 plan are really there's no restrictions on who can contribute. anyone can essentially contribute and name anyone as a beneficiary. So that means parents, grandparents, aunts, uncles, step-parents, spouses, and friends. The contributions and earnings also grow outside of the estate. So funding a 529 plan is considered a completed gift to the beneficiary for estate tax purposes. All contributions and earnings grow outside of the estate, while still allowing you actually to retain control over the account and its assets. And the other real big key here, Bill, is flexibility. So you can invest in any state's 529 program. The funds from any state's plan can be used at virtually any institution out there. And there are very few restrictions on eligibility.
So if you're looking at 529 plans, how do you choose one? What do you have to think about? Like, what are some things that we should do?
Another good question. So there are dozens and dozens of plans to choose from, Bill, some with complicated tax and fee structures. So it's not always easy to choose a plan. I would really say your risk tolerance, budget, your child's age, how much you want to invest, and the overall investment strategy really play a role in which plan you choose. So when we work with our clients at Altair to help select a plan, our process is really to make a recommendation based on the following criteria. And I tried to create a little flow chart here. So one of the first things that we really consider is whether or not to choose an in-state or out-of-estate plan. So one of the big misconceptions out there that parents have is that they have to enroll in their state's 529 plan. I believe there's a study out there by the Investment Company Institute that says 80% of 529 investors opt for the plan in their home state. While some states have great plans and offer great tax breaks and advantages, not all of them do. Some of them have high fees and other things that could potentially cancel out their benefits. I like to start out with is you're not limited to your state's 529 plan. You're free to enroll in another state's plan. If you do live in a state that does offer an income tax deduction on contributions made to one of these plans, so think, for example, I'm not going to name all of the plans here, but Colorado, Michigan, New York, Illinois, for example, I would recommend starting here first. Definitely do a deep dive of your state's specific rules, see what the specific tax treatment is and whether the advantages outweigh any other drawbacks like high fees or potentially lackluster fund performance. Other big items to examine are investment options. So the choice of the investment options is really going to vary by the plan. Some plans offer static and multi-fund portfolios based on passive index funds, while others offer portfolios based on actively managed funds. Plans that offer age-based asset allocation are a popular choice. So these plans will actually adjust your mix of stocks and bonds based on when your child will begin college. Also very important to pay attention to minimum and maximum contribution amounts, depending on how much you want to contribute. And then fees. If you really want to maximize your investment returns, Bill, it's really important to compare the costs of the plans you're considering. Some of the big fees to pay attention to are account and maintenance fees, potential enrollment or application fees, management fees, account fees, etc. A few other key things that I don't want to gloss over here is just administration ease is another big thing. So while some 529 plans have really easy to use modern websites, others are really behind and really lack functionality and potentially require a lot of extensive paperwork to perform tasks. So it's a good idea to get on the site and check that out. And also really compare the plan ratings, ensure that you're choosing a plan that has a proven track record. And then I do want to mention, if you do select a plan that has a state income tax deduction, please pay attention to recapture provisions. So non-qualified withdrawals and rollovers to other 529 plans could potentially be subject to a recapture of all the previous state income tax deductions made during the life of the account. And then you're going to see on the right side here, I thought it would be helpful for everybody on the call just to illustrate a quick example of how the state income tax deduction works. So in this example, we've got an Illinois resident who's contributing the maximum annual exclusion gift to an Illinois plan, so $30,000 between the couple. So as Illinois residents, the individual and their spouse are entitled to deduct up to $20,000 from their Illinois state income So applying Illinois' 4.95% tax rate, that would amount to a $990 reduction in Illinois taxes owed. If we flip to the next slide, one thing I just wanted to point out, for those who aren't clients, there are a number of sites available that rank plan performance. My two favorite are savingforcollege.com and Morningstar. I would also recommend, as I mentioned earlier, that you look into the plan-specific website as well.
So Katie, I see Saving for College. Just made me think, like, how do you figure out how much you need to save? Like, how do you know? I mean, how can you?
Sure.
How do we help people?
So one of the first things that we do with our clients is we take a look at current tuition costs. So you mentioned at the beginning of this call that typically education inflation at times can be more than double current inflation. So as you can imagine, costs will really go up over time. This snapshot here at the top of the slide gives us an illustration of what current tuition costs are at public and at private and public in-state and out-of-state schools. I will say this is just an average bill. In many instances, if you're sending your child to an Ivy League or a top tier private school, tuition, room, and board is in excess of $70,000 to $80,000. So one of the things that we help our clients illustrate is how much costs are projected to be in the year their child attends college. In the example below here, you'll see a child born today who wishes to attend a private school with tuition, room, and board at $70,000 in today's costs. Can expect annual tuition to be over $150,000 in their first year of college for a total cumulative cost of $600,000. So if we go to the next slide, when it comes to funding education costs, I wanted to share some key tips today. So it's not a set it and forget it exercise, Bill. We really monitor tuition costs for our clients over time. We monitor the account balance, and we recommend that people revisit their strategy regularly. So this slide really outlines some key tips to consider. So one of the biggest things that we want to try to avoid is avoid overfunding the plans. Non-qualified withdrawals are subject to a 10% penalty and taxation on earnings. Try to make contributions annually as cash flow allows. You can consider accelerating gifts if you have a high income year. I'm going to jump down to a couple of these. Adjust your contributions. This is a big one as the future student develops more clarity around possible schools and programs, and really coordinate funding plans with other relatives who wish to contribute.
So, and on one of those bullet points, you talk about superfunding. So what is superfunding?
Sure. So superfunding is an election bill that allows an individual to contribute $75,000 or up to 5 times the annual exclusion amount upfront to a single beneficiary in 1 year. But essentially, you elect to treat that contribution as if it were made evenly over a 5-year period. So in this illustration here, you'll see essentially a couple electing to superfund a 529 plan together. So combined, if they're both to do that 5-time limit, $75,000 each, they can both gift $150,000 in 1 year per beneficiary with no gift tax consequences. So in order to execute this and avoid the taxes, both spouses will need to file a Form 709. And if they do elect to maximize this election, additional contributions and annual exclusion gifts cannot be made for 5 more years. If a lesser gift is made, so for example, someone decides to do $90,000, it still has to be applied over 5 years. So one of the questions that we frequently get from our clients is, hey, if I do this smaller amount, $90,000, can I just apply the gift at $30,000 per year over 3 years? The answer is no. So it has to be applied over the 5 years at $18,000 per year. In this situation where a smaller gift is being made, an additional superfunding election can be made more than once in that 5-year period. And I do want to mention, Bill, here, one really important thing to note is the individual needs to live until January 1st of the 5th calendar year to earn the full 5-year annual exclusion. So if someone passes away before the 5th year, let's say, for example, in year 4, 20% of the election amount would be included in their gross estate.
So what if you put too much money in? What if you overfund the plan?
Sure. So this is something that we're getting questions on more and more frequently from our clients. So typically, if you have multiple kids, grandkids, et cetera, we would recommend changing the beneficiary to another family member. So on the right side of the slide here, you'll see a breakdown of eligible family members for a 529 plan rollover. So the big caveat here to pay attention to is if the money is transferred to a family member of a different generation. So let's say, for example, you are a parent, you have a 529 plan with a child named as a beneficiary, there are leftover funds, grandkids are now in the picture, and you want to transfer these funds to the grandchild. That transfer going from G1 to G3 could be subject to GST or generation skipping tax. So in this situation, to avoid the GST tax, you could potentially think about rolling over $15,000 annually to the family member of the different generation to avoid that GST tax. So as soon as you go over that annual exclusion amount, that's when you're going to potentially have to worry about that tax. There's a couple other bullet points down here that you can consider that aren't necessarily as popular. I think, these first two bullet points are the big ones, but you can always also use the funds for other eligible institutions. So think of vocational school. Additionally, if you need to, you can always withdraw the account if necessary, pay the 10% penalty and tax on the earnings.
Okay. Outside of the 529 plans, there's some other things that people should be aware of. And so can you just talk a little bit about those?
Great question. So once a child turns 18, parental access to that child's medical and financial information is limited. So as a result, if your child is injured or becomes sick while they're away at school, you as a parent may not be able to obtain their emergency medical information or help to make potentially major decisions affecting their health. So to prevent this, we really encourage that our adult children execute the following documents. All of these are super critical. So the power of attorney for healthcare bill gives you the power to receive medical information and make decisions on your child's behalf. That's a popular one. We hear a lot about that, and I feel like the next few here don't always come up as much in conversation, but are equally important. So the power of attorney for property, this gives you the power to handle your child's financial matters, such as credit card bills, rent, utilities, bank transactions. The living will, so this spells out medical treatments you would and would not want to be used to potentially keep you alive, as well as your preference for other medical decisions like pain management, organ donation, and then the HIPAA authorization. So by signing this authorization, an individual basically gives consent to have their health information used or disclosed for particular reasons stated on the authorization. So I know this is a lot of information that we threw at you here over the last 15 minutes or so. So by all means, if people have questions or want to dive deeper into stuff, I recommend that you reach out to your Altair engagement team. But hopefully this just gave you a little bit of a taste and some key takeaways that you can leave with today.
Thank you, Katie. It's a lot to digest, and I'm glad we have you. So thank you for joining me.
Thank you.
We jump to the next slide here. I'm going to ask Laura to join me. And a quick bio while she's coming up is Laura George, the founder of Laura George Consulting, an independent educational consultant, as I mentioned before. Her undergrad's from Duke, and she got an MBA from Northwestern, while at Northwestern, she also was a former full-time member of the admissions committee there. She spent some time in the corporate world in several management roles before starting her own firm. And what's another interesting little tidbit that I saw in her bio is that she created and moderates an 8,000 member Facebook group called Parents of College Bound Kids. So welcome, Laura. I'm super excited to have you here. But just tell us a little bit about your business.
Hey, Bill, thank you so much for having me. Yes, my business offers sort of comprehensive help with everything leading up to a student and a family's journey to college. So we do everything from high school and college planning to customized 101 ACT and SAT tutoring, to college search and selection, major and interest assessment, college essay and application guidance. And all of that is sort of served up to you through a one-on-one contact who is called your parent liaison. So we really try to partner very closely with families as they navigate this process to find their child's best fit college.
So when do you really start engaging someone like yourself?
So Really, you can start as early as middle school. So 7th or 8th grade, I think, is a great time to start. And the reason I say that is because I don't want to make people feel like they're behind. But just like with financial planning, there are many things that you can be doing to make sure that your child has the best possible high school experience, then goes on to the best possible college experience. So really in 7th and 8th grade, we can start talking to families about planning courses, thinking about the child's extracurriculars and interests in different subjects and so forth. And then as we get into high school, we can help them with course selection, building their extracurricular resumes, thinking about testing, college search, and that whole application process.
Yeah, I mean, to me, it just seems like this is part of like building up a child's resume or a student's resume, so that all the work that Katie and the engagement team at Altair does, putting money away, you actually have the best chance of getting to school of your choice. Is that right?
Exactly. Yeah, we really have a lot to think about in terms of what your students are involved in to make sure, they really have a lot of options that are good for them.
Great. So how has COVID impacted all of this application process and the things that are going on now?
Yeah, so I mean, obviously it's been challenging. The impact on students last year, what we really saw was a huge influx in the number of applications that colleges received, and oftentimes in excess of 50 to 100% more than they normally do, often with the more selective schools as well. So, the real impact here is because something that we'll talk about in a minute, because the ACT and SAT were made optional in many cases. Many students just decided they would, try for their really super reach schools. They didn't have to have a test score. They could rely on their grades and other things. So it's really made it important for students to have a very strong plan of attack in terms of building a target college list that's really sort of diversified in terms of not only cost, but also, whether or not they might get into some of these schools, so that they have a good range of options, especially in this environment that I think is going to continue with more and more applications being put out there again this year.
So is the ACT and SAT still necessary? Like, is it optional? What do you think?
So, in many cases, it's still optional. Last year, there was a higher percentage of schools that made this optional. This year, it's about 60% of schools. With that being said, test optional has always been a thing, if you will. Some schools do not require tests. In our experience, the tests can definitely benefit students for many reasons. The first really dovetails nicely with what you all do, and that's making sure that students have an opportunity to earn merit money. So when they have a certain GPA paired with certain test scores, that often generates an automatic reward to them in terms of a discount to their tuition that comes in the form of merit money. So, having that score can just really be transparent in the way that it affects a family and gives that extra funding. Other things that really come into play, though, are even though schools are test optional, they still will take and regard your test score. So someone who has the opportunity to prepare and do well and add that piece to the puzzle and to the pie of what they are doing is really, going to set themselves apart as well. And finally, for some programs such as honors courses, some athletes, some specific situations, again, a school is requiring a test score.
Okay. Why would someone need to use someone like you? Like, what type of families or people benefit from you?
Right. I get that question a lot, Bill, and it's really almost every type of family. I think that the misconception often is that only students who maybe want to go to the most selective schools could benefit from working with us, when really some of the things that I've talked about already are reasons for everyone to consider looking at working with us. A couple of facts to give you are that, unfortunately, the average counselor to student ratio in the US is 430 to 1. So students are really not oftentimes getting a lot of one-on-one time with their counselors at school. And we're here to sort of augment that, help them at an earlier stage as well, and make sure that there's someone to talk to all the way along. So whether or not you're really looking for help with getting that test prep, making sure that you might get a score that would qualify for merit money, or you're searching for the best colleges for your student, or you're really trying to just get ready for high school and make sure that your student has the best, options there. We can help with any and all of those things. We also work on major and interest assessment, helping students determine what they might want to study or go into so that they're prepared to take the right classes for that or even apply to the right kinds of schools. College search and selection, as I was saying, making sure that someone has a really balanced target list of colleges that's really feasible for them, both financially and in terms of selectivity. And then just really being sort of that go-to helping hand and anything that comes up, just as you all do with the financial part of it, anything that comes up with, thinking through, planning, and making sure that you have the best path forward to college is something that we can help with.
So I think that's the next slide. I think that summarizes everything pretty well for you, right? The three key steps.
Right. Exactly. So as families are going through and students are going through this, we really want to make sure that they work with exploration and readiness for high school, and then getting into maximizing their high school, taking the right level and rigor of courses, as well as augmenting that with extracurriculars that really are meaningful to them. And then again, looking into that interest assessment, trying to determine what course of study, if that's necessary, or if they're looking more at a liberal arts school, just the type and size of schools that are a good fit for them. And all throughout that journey, we can be of help and assistance to families.
Great. Laura, thank you so much for coming on today. I appreciate your knowledge and your expertise. And
It's my pleasure.
Thank you. Moving along, just to set up the closing here, I want to thank you, Katie and Laura, for your insight. We're on the slide here with my picture on it. If you want to have a confidential conversation with someone at Altair Advisors, or refer someone that you know to Altair Advisors, reach out to me or a member of your engagement team at Altair. I encourage you to visit our website for additional content. You can also follow us on social media, LinkedIn, Twitter, Facebook. Thank you for your time. All the best to you and your family. This concludes our webinar. Thank you.